Launched in February 2004 by a lizard person named Mark Zuckerberg, Facebook initially targeted college students and expanded via emails and word of mouth. 17 years later, Facebook is the largest social media site with over 2.5 billion users and a market capitalization of over $800 billion. But after all this growth, is it still a good idea to buy Facebook stock? In this video, we're going to analyze Facebook as a company by looking at its business strategy, profit drivers, moats, and risks. But before we begin, make sure to claim your 2 free stocks with Webbull. Link down below. Now, let's talk about Facebook stock. So, what's Facebook's business strategy? The growth in users and user engagement, along with the valuable data that they generate, makes Facebook attractive to advertisers in the short and long term. The combination of these valuable assets and expected continuing growth in online advertising bodes well for Facebook, as the firm generates strong top-line growth and remains cash flow positive and profitable. Facebook has increased users and user engagement by providing additional features and apps to keep them engaged within the Facebook ecosystem. With more Facebook user interaction among friends and family members, sharing of videos and pictures, and the continuing expansion of the social graph, I believe the firm compiles more data which Facebook and its advertising clients then use to launch online advertising campaigns, targeting specific users. While utilization of the data is under scrutiny in different markets, we think Facebook's large audience size will still attract the ad dollars. Growth in Facebook's average ad revenue per user indicates advertisers' willingness to pay more for Facebook-placed ads, as they expect high return on investment from the targeted ads. We believe Facebook will continue to benefit from an increased allocation of marketing and advertising dollars toward online advertising, more specifically social network and video ads, where Facebook is especially well-positioned. The firm's Facebook app, along with Instagram, Messenger, and WhatsApp, is among the world's most widely used apps on both Android and iPhone smartphones. Facebook is taking steps to further monetize its various apps, such as providing interactive video ads. It is also applying artificial intelligence and virtual and augmented reality technologies to various products, which may increase further user engagement even further, helping to further generate attractive revenue growth from advertisers in the future. Now, let's talk about Moat. Facebook has a wide moat rating based on network effects around its massive user base and intangible assets, consisting of a vast collection of data that users have shared on its various sites and apps. Given its ability to profitably monetize its network via advertising, I think Facebook will more likely than not generate excess returns on capital over the next 20 years. Now that Facebook has emerged as the clear-cut social media leader, I believe that its offerings, consisting mainly of Facebook, Instagram, Messenger, and WhatsApp, have strengthened network effects for the firm, where all of these platforms become more valuable to its users as people both join the networks and use these services. These network effects serve to both create barriers to success for new social network upstarts, demonstrated by the firm's success against Snap, as well as barriers to exit for existing users who might leave behind friends, contacts, pictures, memories, and more by departing to alternative platforms. Today, we see that Facebook, Instagram, Messenger, and the different features and apps surrounding them have increased user engagement on various devices. Facebook is also slowly becoming an entertainment hub, which helps increase engagement and user time spent on Facebook. The users are posting more videos and providing a live video feed from where they are at a certain point in time. Additional apps created by developers on the Facebook platform also help maintain users within the Facebook ecosystem. According to eMarketer, on average, users are on Facebook and Instagram a combined 65 minutes per day posting videos and photos, exchanging messages, making comments, uploading content, liking or disliking other content, and more. This demonstrates the value of the platform to users and its network effect for the firm. It is very likely that the daily average time spent on those platforms have increased during the COVID-19 pandemic. possibly further strengthening Facebook's network effect moat source. Outside of network effects, Facebook has developed additional intangible assets. Unlike any other platform in the world, Facebook has accumulated data about everyone with a Facebook and/or an Instagram account. Facebook has its users' demographic information. It knows what and who they like and dislike. It knows what topics and/or news events are of interest to them. In addition, without the need for cookies enabled on desktop or mobile browsers and based on the Facebook login, the firm knows its users' browsing history on many non-Facebook sites or apps. With access to such data and to billions of photos and videos uploaded by its users, Facebook continues to enhance the social network by offering even more relevant content to its users. This virtuous cycle further increases the value of its data asset, which only Facebook and its advertising partners can monetize. I think Facebook is well positioned to come out of the coronavirus pandemic with a stronger network effect moat source. In my view, as more individuals remain at home due to lockdowns and quarantines, they will spend more time on Facebook and Instagram, not only engaging with other users, but also seeking additional information regarding many COVID-19 relevant topics. Over time, users are likely to become further dependent on and spend more time using Facebook and Instagram, which will continue to attract advertisers, resulting in a stronger network effect. Facebook monetizes information of its users only by using it to increase the effectiveness of its advertisers' ads. The company does not sell the data to ad tech companies or other third parties. The value of such data and advertisers' willingness to use it is demonstrated by the 26% average annual growth of Facebook's average ad revenue per user during the past 5 years, which we view as indicative of the price that advertisers pay Facebook for ad placement. During the same period, Facebook's monthly average users have grown 12% annually. Facebook's large and growing user base and the rich data that it generates helps advertisers post more effective target ads in terms of brand awareness, resulting in higher return on investment. With higher ROI, more advertisers jump on board, allowing Facebook to further monetize the network. Antitrust enforcement and further regulations pose a threat to Facebook's intangible assets, data. However, increased restrictions on data access and usage would apply to all firms, not just Facebook. The firm's large audiences and the continuous consumer engagement are likely to continue to drive demand for Facebook ad inventories, although possibly at lower prices. Facebook has also expanded its user base in the growing mobile market, which positively affected the network effect as it became more valuable to advertisers and resulted in more ad revenue growth. The main driver behind growth in online advertising has been growth in the mobile ad market and the video ad format. Most Facebook users are now accessing Facebook and its apps via mobile devices. While smartphone users in the US spend more time on social networking applications and more time on Facebook than any other social networking application, users around the world spend more time on messaging apps such as Facebook's WhatsApp. The firm has not monetized WhatsApp, as its attempt with bots was not welcomed by WhatsApp users. Facebook is now offering WhatsApp to businesses, which can use the platform to not only highlight various products and services, but also as a customer support platform. Other features such as sending money and receiving money have already been added to Facebook's Messenger. By working with advertisers, Facebook is also adding a similar click and buy feature to photo and video ads, especially on Instagram, where viewers can click on a product they like within the video and get more information about it or purchase it. In the long run, we believe these strategies can further strengthen Facebook's network effect, driven by growth in user base and user time spent on the platform, and businesses having more options on how to market their brands and products. While not a primary source of moat, we also think that Facebook benefits from modest customer switching costs. Although it is easy for customers to sign up and use alternative platforms like Snapchat, departing Facebook and its own platforms may cause some friction for users. Facebook users today would lose data such as posts, pictures, video clips, and contact information. Their nearly 1 hour per day interaction with other users, and much more. Even though many users access more than one social network per day, it does not appear to be at the cost of declining users or user engagements within the Facebook ecosystem. Now, let's talk about profit drivers. Facebook is expected to have 20% average annual growth over the next 5 years, as they plan to further invest in research and development and content creation and virtual reality and augmented reality offerings. In addition to data security, Facebook is expected to have 37% average operating margin during the next 5 years, lower than the previous 3 years' 39%. Facebook's revenue growth will be driven primarily by growth in online advertising and increasing allocation of online ad dollars toward mobile, video, and social network ads. The pressure the firm faces from users and lawmakers, legal fees could continue to affect margins. The operating margin is likely to expand after 2021 and during 2025, as lower growth in operating expenses driven by more automation of content, data, and user monitoring, coupled with revenue growth, will create operating leverage. Risk and uncertainty. While barriers to exit for the 2.5 billion users may be increasing, the risk of another disruptive and innovative technology, more recently TikTok, coming onto the scene and luring users away from Facebook and its app remains. I do not expect competition in the form of a substitute for Facebook, as most consumers are users of more than one social network. However, given the fixed number of hours per day, an increased usage and engagement on one social network could come at a cost to other social networks, reducing user engagement and the potential return on investment for advertisers. Decline in ads would hurt Facebook's top and bottom line, reducing return on invested capital and the firm's fair value. Furthermore, even with Facebook's dominant position in the social network market, its high dependence on continuing growth of online advertising could heighten the negative impact of a lengthy downturn in online ad spending on the company, resulting in a much lower fair value estimate. The risk remains that limitations could be imposed by regulatory agencies around the world on what user and usage data Facebook can compile and how the data can be utilized. In addition, some governments may simply forbid access to Facebook, which could result in lower user growth and user interaction. Similar to Alphabet, Facebook also faces limitations on the M&A front as the US and other countries attempt to lessen the firm's dominance in advertising and the overall internet market. Now, let's talk about stewardship. Analysts assign a standard stewardship rating to Facebook's management, although the firm initially had some difficulties addressing data privacy and security issues, such as the Cambridge Analytica scandal in early 2018. Through different acquisitions, such as WhatsApp and Instagram, the management team, more specifically founder and current CEO Mark Zuckerberg, has demonstrated its focus on long-term return on investments, which analysts view as positive. With its large amount of cash and cash equivalents, along with no debt, Facebook is well positioned to make additional investments in the form of acquisitions or more research and development. I expect the firm to continue to make decisions regarding capital allocations that are beneficial for its social network users and its shareholders. We also applaud management's walled garden strategy as it continues to protect the firm's most valuable asset, its user and usage data. However, the US and other governments around the world may also impose restrictions on Facebook's acquisitions and data utilization. Management has responded well as it continues to increase its influence in Washington, D.C. Well, that's it for today's video. If you enjoyed this video or learned something, please smash the like button and subscribe to our channel. It really helps us a lot. Thanks.